This is Matthew Cratter from Trader University, and today I want to talk about some very bullish signs for Bitcoin. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading and investing in, be sure to hit that subscribe button. So I've entitled this Bitcoin on track for a $100,000 price target. You'll see why I chose that title by the end of this video. But just wanted to give you an update on some very bullish things that I'm seeing. Now, this has been a very boring market for traders for the last month or so. We can see here I have the a Bollinger Band chart of Bitcoin. I've set the period to 20 days. And what we can see from this chart is that Bitcoin is hugging the middle line very closely. This is the 20-day moving average. And every time it tries to stray above it or below it, it mean reverts to the middle band. There seems to be a perfect balance right now, at least, between sellers and buyers on the margin. At the same time, we're seeing volume really collapsing. And so as a result, it makes for a very boring market. And I think Raoul Paul does a good job of looking at the 30-day historic volatility and seeing where we are based on that. So for example, 30-day historic volatility is just a measurement of the standard deviation of daily returns. It's a statistical measurement. Basically, he quotes a chart here from, he cites a chart from Bloomberg, and we can see that Bitcoin has only hit 20% historic vol, 30-day vol, 7 times in the past, and that would be at the bottom of this chart. Now we're on our way to hitting it again, and I think what's interesting is that he points out that six times after vol hit 20%, the price exploded higher immediately. So we have this process of compression and a tightening of ranges, and this ultimately leads in most markets, and especially in Bitcoin, to a huge breakout either to the upside or to the downside. We're in the most bullish part of the 4-year cycle. We just had the halving in May, and so I would expect this breakout to be to the upside. And it's interesting that 6 out of 7 times the breakout has been to the upside after hitting 20 vol. The only time that it fell or broke to the downside was in November in 2018. And I think that was a completely different situation. This is a chart. Here is November 2018. We can see we had a period of really tight trading right before that. But this is in the context of the most bearish part of the cycle, that last 2 years before the next halving. We had a huge peak at the end of 2017, and the market was clearly still in a downtrend as measured by the 50-day moving average and the 200-day moving average, the blue line being below the red line. If we take a look at the situation here, it's completely different. Where we have the blue line trading above the red line, Bitcoin is up for the year. It's up sharply from the lows as well. And so it's a very constructive chart. But I think if you look a little deeper under the surface, a lot of the fundamentals for Bitcoin are very bullish as well. I've talked endlessly about the supply cut, this huge supply shortage that's been caused by the latest halving, as well as by the increase in the number of hodlers who are basically taking Bitcoin and hodling it away. But if we look even at the number of active addresses, I'm using Glassnode Studio here. I'm not affiliated in any way, just a customer, and very nice metrics about what's happening on chain with Bitcoin. The black line here is the price of Bitcoin, and the orange line is the number of active addresses. So we can see that the number of active addresses has really been increasing since 2018, and we're almost back to the active number of addresses at the peak in December 2017, even though we're not close to the price. So this would suggest a divergence where the price should catch up to this demand for active addresses. Another very interesting metric from Glassnode Studios is that, or Glassnode Studio, I should say, they have a nice way of charting here the percentage of the Bitcoin supply that is being sort of locked up and held for the long term or hodled. So this top line here, this sort of pink maroon line, is the percentage of the supply that the total Bitcoin supply that has not been active for a year or more. And this is currently sitting at 63%. Think about that. That shows just how Bitcoin is morphing into a form of digital gold, where people are not using it to buy coffee. They're using it, they're buying it, and they're putting it away. They're storing it on a hardware wallet and holding it for the long term. So 63% has not been active for a year or more. 45% has not been active for 2 years or more. And 32% has not been active for 3 years or more. And if we scroll out, we can see that these are all turning upwards. And the number that have not been active for a year or more has been hitting new all-time highs. So this really shows, if this chart, if these were all sloping the other direction, it'd be something to worry about, which would show that fewer people are holding Bitcoin for the long term. But in fact, it's the opposite. And this narrative of hodling is really beginning to catch on. Obviously, you can trade Bitcoin, but I think the really big money is to be made when it goes up 10x, 100x, 200x. Now, what's amazing also this week, the point I'll end on and where I took the title of my video from, Bitcoin on track for $100,000. This is an article from Bloomberg that the full version is only available if you own a Bloomberg terminal, which is something like $25,000 a year. But they do give you excerpts here, which I will link to. And this is the first serious piece on Bloomberg that I've seen about Bitcoin. Normally they run articles about how Bitcoin, the exchanges have been hacked, or it's a bubble, or it's a scam, that sort of thing. But this is a very serious article that does some real analysis. And the basic premise here is that Bitcoin adds a zero every few years. And he obviously does a little bit more in depth than that. And so I think he has a fairly, this is Mike McClone, I think he has a fairly conservative target for Bitcoin. I think he's massively understating the upside here, but even he is saying Bitcoin will be worth 100,000 or roughly 10x from here in 5 years from now. He's modeling in sort of slower growth rates than I would, or that Plan B would. But it's very interesting too that he says he's really only bullish on stable coins and Bitcoin, where the rest of the crypto market, it's a little bit difficult to know the future supply. Obviously, stable coins don't have price appreciation, so they're a whole different ball game. But this would suggest that institutional investors, which is what I've been saying, when they come to crypto, the first place they're going to invest is going to be Bitcoin. This will be the investment where this will be the place you can invest in Bitcoin and not get fired by your investors. I will link to this. He also shows how as the asset matures, as Bitcoin matures as a new asset, the volatility will contract as well, which will make it even more investable as time passes. He also makes a very interesting point, which I'll end on here, is that Bitcoin, the scarcity of Bitcoin is really underestimated by institutions. And he does this comparison with Tesla. And basically, when Tesla's price goes up, and I'm still very bullish on Tesla, but as Tesla's price goes up, it actually leads to more shares being issued. Now, the market cap can still go up, the stock can still go up in price, even with this increased supply. But Bitcoin has half the market cap of Tesla, and it actually has a completely fixed supply. And the new supply is declining on an annual percentage basis. Basically, Bitcoin inflation is going down, and it'll eventually reach the point where no new coins are being issued. So I think this is a really good insight into how institutional investors are thinking about this, in that they're really focusing in on the digital gold narrative, and the fact that when a stock goes up a lot, it can just mean that the company uses that opportunity to issue more shares. Now, if they issue more shares and invest that cash wisely, that's a smart thing, and I trust Elon to do that. But Bitcoin, higher prices do not lead to more supply being issued. There are only 21 million coins. 3 or 4 million have probably been lost. This is a very, very scarce asset. And so it was funny on Twitter, actually, in the Bitcoin community, Bitcoin Twitter, people were actually very upset by this, saying, what, it's only going to go to 100,000 by 2025. Obviously, no one knows the exact rate of appreciation or depreciation for Bitcoin, but only Only among Bitcoiners would you see people unhappy about 10xing their money over 5 years. There's virtually nowhere else that people will be able to do this over the next 5 years. Apple at 2 trillion market cap or whatever it is, it's not going to 10 trillion over the next 5 years. You may be able to find some small caps that do this, but even if this rather bearish from a Bitcoiner perspective price target becomes true, it's still going to be very, very good for Bitcoin. I think we actually hit 100,000 sometime next year, probably before the summer. So I think Mike McClone, obviously he's employed by Bloomberg. He can't say the sort of crazy things that I can say on my YouTube channel or that Plan B can say on Twitter. Crazy being all relative, because we do try to back it up with modeling and empirical data. So all in all, a very boring time for Bitcoin. But I think it is making 10x or 100x on your money. It's never going to be easy. There are going to be drawdowns, and then there are going to be periods of extreme boredom as well. But I think we're quite on track. I'm especially encouraged by the number of new active addresses, as well as the actual percentage of supply being taken off the market, shrinking, and being hodled. If you found this video helpful, be sure to hit that subscribe, like button, hit the notification bell so you'll be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for listening, and I'll see you in the next video.